Good morning, it's Monday the 30th of January. This is the Phoenix Blue Update brought to you this morning by Tom Colley. Last week was a somewhat range-bound week, predominantly uncertainty driven by exactly what Donald Trump was going to do in his first week within the presidency. I think what he's shown is that he is likely to do exactly what he said he was going to do, despite how controversial that may be. We've seen that over the last few days with the executive order he signed to prevent people coming into the US from certain specific Muslim countries. I don't want to get into the arguments on that, but it all seems to point to the picture is that his intention is to do exactly what he said he would do within his campaign. This week we've got, whilst taking that into account, I have to say we've got a raft of central bank announcements. One significant thing also worth mentioning is we have the Chinese New Year holiday, which effectively means the Chinese are on holiday for the whole week. So we would expect there to be a lack of liquidity in all the Asian sessions this week, and the possibility of some extreme unpredictable movement. So if that's a market that you watch, trade or whatever, be very aware of that. In terms of the central bank announcements, Tuesday we've got Bank of Japan. Things have been going okay for the Bank of Japan in the last few weeks since Donald Trump won the election. We've seen dollar strength and we've seen a weakening in the yen, which is the Bank of Japan's objective. So I'm pretty certain they're going to be sitting there relatively content and looking for that to continue. So I don't see anything very specific coming out of that meeting. But as always, that's only an opinion. Do listen to what's said or do read what's said, etc., etc., and we can interpret that in the markets after the event. Then Wednesday, the biggest event, we've got the FOMC statement and Fed funds rate. The only thing we haven't got in this one is we haven't got a press conference from Janet Yellen, so this will potentially be less significant than others. I'm sure, having also had a rate rise in December, we're not going to see any movement on rate here. It will all be about how the statement is perceived being hawkish or dovish, so we will await that and report back on that. Thursday we have the Bank of England, we've got the monetary policy official bank rate, and we've also got the inflation report. Again, something we're not necessarily expecting any change on. The interest here will be to see how the Governor Carney responds to the continuing positive data that's coming out post the Brexit vote, and also developments in that vote and potential developments between the UK's relationship with the US following Brexit. So it'll be interesting to see whether his statement proves to be more dovish or more hawkish than previously. Or, to be fair, previously his last comments have been, in his opinion, rates could move in either direction next, which just reiterates ongoing uncertainty on the Bank of England's behalf. Then added to all those central banks, we've got the biggest thing in the FX market. We've got the non-farm payrolls out on Friday. We will be looking for this figure, although the forecast figure is 170. Having looked at what's happened in the last 3 to 6 months, as long as that figure remains above 150,000, I think that will be treated as being relatively positive. There seems to be across the board an acceptance that in the US they are approaching full employment within the terms of this measure. Okay, over to the charts themselves. Bearing all those things in mind, we will see an element of caution from our approach this week. Dollar index, here we have, we clearly had a negative start to last week, but then the dollar recovered through the back end of the week. You can see we've got a downward trend line here. Clearly we're looking for a break of that, for confirmation, a break of this level through here for confirmation of dollar strength. I've got another level in here because I see that as a potential head and shoulders. So long-term dollar strength, I will be waiting for that to break before I consider that to be the case. However, if we get above this 170 level here, I will be bullish the dollar overall. We remain bullish the dollar. We'll need to see this level broken to the downside before our overall bullish stance disappears. So we will be watching that. As I said, a move above there, I'll remain bullish, but the key level for me is this 101.70, 101.80 area at this sort of level for us to see ongoing dollar strength play out, as a lot of the markets, certainly coming into the year, was expecting on the back of Trump policies, etc., etc. The euro last week basically somewhat range bound again. It started as a sort of level, it finished at the sort of level that it started at. We've got a level through here which we're watching on an intraday basis. On a break, we've got a rising wedge here. We'll look for a break to the downside and a retest of that level 107.15 through there. With an order in place here at 1.0850, being a significant level for they take this market back to the downside. I've got another level marked in here at 10820. That's a level I like and would potentially be trading if it wasn't for this spike here. This one spike here leads us to an element of caution, so we've moved back a level as such for our order there. However, having said that, I will be watching this level here for a change in cyclicity or price action intraday to take that back down to the short side if that was to play out ahead of that. So a couple of alternatives there, but the base level is 10850. Over on the yen, well, we're clearly within some sort of range here. You can see I've got an order waiting at the bottom of the range to take it back up to the top of the range. The alternative will be a break above this 114 or 115 level through here, 115.40 I think it is. Break, close above, retest, and take that back to the long side. Having said that, I've got an order at the bottom of the range there. If that fails, we've got a market cap type order, which is a major level order here, which we're looking to take advantage of should that fail. And we will, of course, be correlating this with the euro and the dollar index. And if it coincides, or there's confluence there, then we will hold this trade or look for the second trade there. Over on the Swissy, well, we've got the same orders we had in last week at 99.50. Take a view to taking that to the long side back to the previous highs. This market also is setting up as a potential head and shoulders. I say potential, there's no reason other than we've got this potential, or this what would become the potential left-hand shoulder here. We've got this order in place. We also have another order or call out for a trade of last week's range. You can see clearly the market absolutely ranged between these two levels last week. We'd be looking for a break of the top of that range, or with the stop order, stop below, again take that to that high side. I haven't actually placed that order yet, predominantly because we started with a gap down this morning, so I'll be keeping my eye on that, and if that does play out, rather than the 99.50 level there, we'll be looking to take that to the long side through there, being aware, correlating it with that euro for that potential head and shoulders there. The Aussie and the Kiwi, somewhat similar. We can see we've got a rising trend line here, which will be respected. A lovely bit of respect on that trend line through there. We aren't short this market yet. We are looking for a breakdown, a close below the 7,500 level here, and a retest to take that to the short side. You can see I've got an alert set there just in case we get a break to the upside for one final test of that trend line or otherwise. Kiwi is very similar, although in this market we did take an intraday 4-hour chart reversal off this downward trend line here, so we're already short this market on an intraday basis. We will be looking clearly for a break below the level here at 7,250 and a retest to take it down to our next level there. So clearly our bias remains dollar strength. There's a lot of uncertainty or potential uncertainty in the markets because of all that central bank news, so we will be watching that and trading predominantly cautiously unless we get something that gives us clear direction on that dollar. We're very aware of Donald Trump and his tweets, etc. I mentioned it before. Make sure you're signed up to his tweets so you're getting alerts when they come through, because certainly in the short term, that is as significant as any other news item as far as we're concerned. Okay, guys, that's it for today. Just a reminder that this is next week now, Thursday the 16th of February, our next free trading event in London. Absolutely free to come along, trade alongside live with our Phoenix Blue fund managers. They'll also talk to you about our strategies and our techniques and how we look at the markets and how you can potentially improve the prospects for your trading going forward. If you are interested in that event, please either email us at info@phoenixblue, or if you go onto the website and go through the contacts page there. Okay, guys, that's it for today. Let's hope it's the start of a great week. Trade carefully, and we'll look forward to talking to you again in the morning. Goodbye.